Aloha and welcome to Java. Thank you for joining this morning. So I thought I would start us off with this is Neil Kashkari. Quite a bit happened yesterday, really did affect the markets, and we'll go into that. So for now, today is Friday, April 5th, 2024. So we're going to go into some of these risks, what happened and why. So the MMRI is right around 280.8, which given everything that happened, is kind of hovering around neutral. The market is actually absorbing this relatively well. We've got the relative strength of the dollar and the 10-year yield both shot higher yesterday on this news. So the markets took a large hit, and we've got kind of a fear trade going on. The volatility index shot up along with gold and oil on the tensions in the Middle East. So we've got futures saying, though, that there's a bit of a recovery in store for today, and we'll go a little more into that. So the current sentiment is that this hit on basically was Iran vowing retaliation within 48 hours, which now leaves us, I don't know, a dozen hours or so, less than 24. And also, we heard from both Jerome Powell and Neil Kashkari, who's the Minnesota Fed president, saying things about the rate. So the markets dropped and built in what we call a bearish engulfing candle into the close. So their game from the Federal Reserve is in full swing. Right now, we are in a neutral to caution area on the fear and greed index. Dropped it significantly from 62 down to the current 54, enough to put it in that neutral zone. I do, on a personal level, think that markets are still not dropping the way that they should. After the run-ups that we've had, this is something that is needed. So going into the calendar this morning, we are expecting non-farm payrolls, watching the unemployment, and then also hourly wages. So we're getting more Fed presidents in the middle of the day, and they can really, as we've seen, move markets. So yesterday was the Dow's worst day in over a year, as the Fed was talking about no rate cuts, and then also there was the oil price spike due to the war fears. So our jobless claims in the United States did tick up yesterday, and we're watching for the jobs to continue. So this is what happened in the markets. This is basically the S&P 500 on that news, pretty much waterfall down. This is a 3-minute chart, so it was based over the day, but it shows the significance of what happened and how comments can really affect the market, how rapidly it goes. So was Kashkari saying he expects 2 rate cuts this year? But he said it's possible that there will be none, and this is because of the continued inflation. So with all of this and what's going on in the Middle East for increasing the price of oil, that's all highly inflationary. So we'll see how they play this game. So between the central banks, we've been talking about Japan. Kishida's continuing to warn that if the yen makes some severe moves, that they will step in and intervene. So watching the US 10-year and everything that's going on, they're going to basically adjust their policy. And they've thrown the markets before. So along with that, in Japan, households are still suffering from inflation. So they're cutting back on their spending. So they had easy policy, zero interest rates, negative interest rates for some time, which weakened the yen. And now inflation is kind of running out of control. So the flip side of that is we've got the UK's largest hedge fund. They're betting on the markets getting the Bank of Japan hikes wrong. So anybody's currency trader out here, I'd like to hear from what you think about this. I find that very interesting. But that could affect US and global markets. So what's really going on? Well, I think we see it in solid assets, and we've got record high gold exports driving Canada's trade surplus. So all of the central banks and a lot of the major funds going into either bonds as a safety play or gold. So with this, got Jamie Dimon again, JP Morgan Chase, cautioning a brace for inflation. So they know it's not going to go away. And they've also actually, on the other side, started to build digital media business. This is a lot in relation with credit cards. So they know this debt has to continue. So last note is the European Central Bank, watching clues for them, but they may cut in June. And so they're kind of watching the next one on deck. So as we're speaking about with oil, they're saying this whole commentary is basically how oil is expected to continue higher. Even as high as it is, it's going to continue. So we've got Asian stocks fell a bit under a week over the evening period. And we've also got what's going on with the worries over Israel's war and what is going on with Hamas, but really by proxy, Iran. So just to note about this, since we're on commodities, the Bank of International Settlements, as well as several other central banks, are exploring asset tokenization through a project they're calling Agora. So this will expand and it will include everything to include barrels of oil from export process all the way through to our beef cattle in the United States and abroad. So Mantra Chain CEO talking about everything will be tokenized, including us. There's a lot more about that, not going to go into that here. That is a lot of discussion for some time. So going into our economy and labor, we've got quite a bit going on here. And the big question, will the United States unemployment rate continue at historic lows? The answer to that, flat out, is no. There are already so many job cuts slated across the board for larger companies that is an impossibility. Not only that, there won't be rate cuts until unemployment increases. So, contributing to that, we've got Illinois. They got hit by mass layoffs and they're closing 4 factories, namely Quaker Oats, Blommer Chocolate, Rivian, and Monterey Mushrooms. So there's going to be more business closures in the near future. And as they close, of course, that leads to layoffs. So this company, we've got multiple signs and stories of layoffs and bankruptcy happening with businesses. But I brought this one up because it's called a company called Shoes for Crows. They're filing for Chapter 11 bankruptcy, basically trying to value maximize their sale transactions for the business. So they make shoes in specific, they have specialized in work shoes. So kind of going along with the labor and the economy in general. On the global front, we've got wars, 2 different sides, and they're both hitting very hard. We've got first the currency wars that are going on, and then, of course, the physical wars. So, first, we've already spoken about some of the physical wars. So, after Israel bombed the embassy, we've got Iran vowing that Israel will receive, as they say, a slap in the face for the attack on Damascus. The Ayatollah has warned them. However, it's much more severe than how we take that in the West. So, kind of watching on that. So, Israel is planning to adjust Gaza war tactics after the unfortunate event that happened. They're looking at opening another aid route into Gaza, and they'll change a few other things. So, moving on, we've got China. They're quote unquote incredible growth threatening American and European economies. So this is from the US trade chief. We had Janet Yellen went over and she's basically attacking China, saying they've got coercive trade agreements and moves that are basically going to hurt the global economy. Well, they're only doing what the United States has been doing for some time. So looking over into the currency wars, we got Turkey as main player in both sides. So for the moment, basically as an ally. They've got their trade booming. They are still trading with Russia, but the lira, Turkish lira, has recently taken a hit. They had severe devaluation of their currency. And now we've got Abu Dhabi now looking at Turkey for deals in an overseas push. It's because right now they're extremely inexpensive. On the other side, we've got Zimbabwe is replacing their dollar with a unit linked to gold. Now, linked to gold, not gold backed. I've heard a lot about Zimbabwe being backed by gold. They're linking the value to a basket of currencies and commodities. Gold is one of them. This is not anything to get excited over. Central banks will not allow a gold standard. It would kill their business. So, with that, I wish you a great day in general, and I wish you all until I see you next time, stay free.